Micron earnings, the fiscal fourth quarter numbers relatively in line with estimates, a slight nudge above them, but really it's the forecast that's causing a little bit of concern. Adjusted revenue for the first quarter, the guidance the company is giving is $4 billion to $4.5 billion. That sounds good, except Bloomberg consensus was for $6.02 billion. Paula, Penkal, technology analyst for Bloomberg Intelligence, joining us right now to help us walk through the numbers here. Let's start off with the adjusted revenue numbers before we get to some of the CapEx numbers here. Did that surprise you, the guidance that they gave, even though they had kind of warned, I think, just a month or two ago, that this might be coming?
Yeah, I think that was the big surprise because they just came out with a revision to their numbers on August 9th. And so it's a little surprising that there was such a large miss. And in terms of revenues, I think it just reflects the really weak consumer. If you look at this cycle, this downtrend relative to previous downtrends, this one's definitely demand-driven versus just supply-demand, driven.
And remind us of the end markets here. Where are they being so hit when it comes to their exposure to the consumer?
Well, it's going to be in their computer chips. And, I think with, if you look at the server business, a fear was that the weakness was going to spill over or spread into the data center segment. And, put aside the hyperscale, that's a different animal. But just in terms of data center server business, I think it's probably spread to that as well. So you're seeing it in computers and PCs, the chips going into that. You're seeing it in iPhones, cell phones, and you're seeing it probably in the server business as well now. We'll see what happens on the call and what they have to say about that.
You mentioned that the big miss highlights that they may not have a lot of visibility into their clients. How concerning is that we don't know that visibility in the runway room? Well, that points to this really being the traditional boom bust business, because in the end, their customers, even though Micron has been wanting to, they talk about how their product is differentiated and it's more proprietary now. But the reality is their customers still view it as a commodity.
Talk to us a little bit about spending, because there's been so much talk about the capital spending plans, I should say, that were announced by a lot of these chip makers, particularly here in the United States, as we try to onshore some of that chip development. We heard that Micron, in the release here, is actually going to cut the CapEx spending, at least on a percentage basis, down a little bit. Do you anticipate that we're going to get other announcements like this from other chip makers and other equipment makers?
Yes, I think what they're going to do is slow down their capacity build. In Micron's case, look, it's actually a very sensitive situation, because they're going to slow down spending on equipment. They're not going to slow down spending as much, at least that's what I read in the report. We'll see what they say on the call, but they're not going to slow it down as much in R&D.
Yeah.
And what's happening, though, is they are likely to continue their transition to higher, better technology because it's more cost effective. And when you do that, by default, you're creating more capacity. Yeah. So I'm going to pay close attention to that balance of the slowdown in capacity coming onto the market, as well as how much capacity is coming on by default, because not just Micron, but their Korean competitors are also transitioning to higher technologies.